Hi guys, and welcome back to Nifty Challenge. See, we'll be learning some important candlestick patterns as a continuation, and because I've just taught you about some trendline things, and sorry, but there's not even enough views, not even enough likes on the content that I'm posting. I expected you guys will at least cooperate and appreciate with my content, but I don't see that happening. All right, never mind. So that's okay. Now I'll be teaching you a very important pattern today, and it's the first one on the continuation patterns. Since I've taught you about the single candle, double candle, three candle patterns, and now this continuation is something very important too. And for this candle, you would require support and resistances, which I've already shown you a little bit on the previous video how to use it. You will not be needing much of it right now, but you will be finding support and resistances right with me using the trend lines. So this pattern is called an ascending broadening or ascension broadening, you can say. It's all you can say a continuous broadening pattern also, and it's a bearish pattern. And you will identify where to sell, where to buy in this pattern, and how to use it to your advantage. You can use this, the best part of this is you can use it in a longer time frame. You can even use it in a shorter time frame for intraday options, for intraday trading on a 15-minute period or on a 30-minute or 1 hour period as well. So for this candle pattern, what you need to learn, the first thing is using a trend line. So just opening a trend line, I'm using a higher high and a lower low. This is a bank nifty chart, which you can see. So let's see this chart here. So I can see the pattern is forming right here. So you see it in March the fall came, it went up, came down, went up, came down. Now this is slowly going up. How you identify this pattern is that every time an upside is happening, it is more than the previous upside. You see, this is an upside, this is previous higher than previous upside, this is higher than previous upside, this is higher than previous upside. Same ways, the lows are higher than the previous lows. See, this is a low, then this is a bit higher, this is a bit higher, this is not, but the lows are also going lower than the previous low, you can say, because the pattern is actually ascending. I will show you how is it ascending. So let's see, use this one here, and from here we draw a line up to this area, joining these lines just like this. Similarly, we draw a line just from here up to this area, and you see this is broadening and ascending. How is it ascending is because you can say that this is ascending and this distance is increasing, so we can call it as a broadening as well. So what happens in this, that there's an upside and there's a downside, then there's an upside, there's a downside, there's an upside, a downside, upside, and the final downside finally breaks this channel and goes bearish. So this is called an ascending broadening pattern, which is a bearish pattern. Now we'll be learning about it in a much better way, how to use it, how to find support and resistances, and how to use it to your advantage. So for that, I'll be using a chart of bank nifty as well. So this is a pattern I've already drawn for you. So see, I will just write down some important things for you, so that you learn this pattern quite well and you can really use it. So first of all, to find this pattern, you can see this in the 5-minute, 15-minute, or whatever period you are seeing in general if it is forming, and I'm sure you will do the homework about it. So let's see, this is, we made a pattern. I joined this high with the last high and went upwards, and then what you can do is, when this is made and this is made, so you have two triangles already made, you just join the two triangles. You just join the two triangles and make a trend line. Same way on the lows, on the two lows, you make a trend line. So you have got one, you have got point number 2, you've got point number 3, and point number 4. As of now, I'm just telling you that this is not yet done in the market, and you are on this particular date on 29th of October. So this thing is done. You have drawn it. Now let me write down these things for you. It's a continuous bearish pattern. I'll just write the name first. It's called ascending broadening pattern. Sorry about that. It's a continuous pattern. First thing. Now, how to recognize this pattern is that it will show you higher highs and higher lows. Okay, and with broadening of the range. Okay, I hope you have got this much. It's a continuous bearish pattern showing you higher highs and higher lows. Even the lows are moving on an upside, and range is broadening. Slowly the range is broadening. I hope you have understood that. Yeah. So now what you do in this case is, I'm assuming you are on this particular date, you formed these two lines joining these two, and you created these two trend lines. Now we mark this as 1, as 2, as 3, and as 4. The next point where we have to achieve is number 5. Now this can be somewhere on this trend line where it can take a support. Let me show you it something in another way. Yeah, okay, I hope you understood that. So what you will do is, you have to create this 1, 2, and 3, 4 first. I hope you have understood this part, that right now this does not exist. Only these two things exist, and I have drawn two trend lines like this. So what you will do, that you have to identify this point number 1, point number 2, point number 3, and point number 4 as well. Okay, so on a safer side, what you will do, see this low is higher than the previous low. Now this is around 23568, and this is around 245403. So next time when this has started moving, or even when it is in this area, when you make a buy in this area. Okay, so you make a buy in this area, and what you can expect is that this will go up to an area higher than this previous low, 100% higher than this previous low. So you can buy on a longer term here for any particular stock, for any particular index or anything. You can go for a buy at this point number 4, and you can be sure that this is going to break this top. On a safer note, you can set your target right here on this number 3. Okay, so you see what happens, it breaks this, and then it's not necessary that it will match your trend line. See, next time it has gone even further, but once it has crossed this number 3, what you can do is you can go for a sell above this number 3. Now you were here, you booked your profits. Okay, and if you booked your profits, just wait for another day where it crossed this top. Once it is crossed, wait for another day, and next day you can go for a selling in this area. Okay, it took some time. You went here, it came here, it confused you, it went more higher, it made a higher high than this area, and then you see a fall comes and you will get into profit. Now if you have sold in this area, again, where will you book is, again, this was the place where you bought last. Now you have to go at least 20% higher than this area, at least 20%. Remember these things, at least 20% higher than this area. If you go from this range, the 20% of this range is coming around this area, so this many points. So from this points you go down and you again book a profit here. What you can do is, again, when it comes down, makes a particular pattern for you to understand. We show you on a closer time frame. So you sold here, you came here, and then you booked profits here in this area. Next time you sold here, it took you some time, but then it came down, and it has given you a profit again in this area. Now this 20% in this area, in the sense that I meant is, now you see this range, I'll have to calculate that. Let me see, this is 28,990 and this is 24,408. So once you have sold in this area, when you are 20% down from the price from this area, 20% down, I'm sorry if I've confused you on that, 20% down from this area, you can again book profits on your sell side. But even in that case, the sell side is more safer on this pattern, is always because it is a bearish pattern. So you can still hold this, because what this pattern will do, it will form another higher high, it will form a low which will be higher than the previous low. Then again, now you start naming it. You have named it as number 5 and you have named it as number 6. Again you will go to a high which is higher than the previous high, and then another fall will come. Now this is the speciality of this pattern, that on number 7 you must sell, because when you sell, then this number 8 that happens is lower than always the number 2 that you had formed. This is the speciality of this pattern. This number 2 that you had, this low after number 7 will always be more than the low of this area. So this is the catch, that you can have massive profits on this point number 7 on a selling side, and that will be more than the first low that this was formed when this pattern started forming. Let me come to more of this, and I'll just show you some more of these patterns so you understand it much better. Now see, I'm on a chart of Reliance. I'm on a chart of Reliance Industries here, and you can see this. Okay, let's notice here. It made a high, it came down. It made a high, it came down. It made a high, it came down. Now see what you have to notice. It made a high here. This high is 482. The next high is higher than 482, that is 491. It made a low, that was 450. The next low is higher than the previous low, that is 452. It is higher. The third low is again higher, 484. And you see, if you notice, you start putting here, you make it as 1, you make this as 2, you make this as 3, this is 5, and it can go up to this area, and then you use it here, 2, 3, 4. Okay, since you will be using it right here, I can show it from here as well. Just a small rough idea I'm giving you. So it made a high, you sold, you saw this thing have formed, you saw this formed, you saw this formed, you saw this formed. You always trade after point number 4. Do not trade between 1, 2 and 3 and 4. So this formed, and this formed. You confirm that the low is higher than the previous low. You confirm that the high is higher than the previous high. So what you did in this area somewhere, you bought. You will buy to a target, that because you are sure that it is going to go above this higher next time. You see, and you can buy here for a target up to this high on a safer zone. So you bought here, you made profits here. It went higher. The moment it crossed some level, you can sell anywhere here. The moment it formed a red candle, you gave a selling. Okay, it trapped you for a few days, but it will definitely come. You see, it comes, it made a low, it is again higher than this low, but it is still lower than where you sold. You see, this happened. Then again it went higher, it is higher than the previous low, it is still higher than the previous low, and then again you sold. And when you sold, the next low that is formed, the point number 7 that is formed, is lower than point number 2. You will get massive profits if you sold in this area and you made up to this area. Okay, now there is an opposite pattern to that called descending broadening, which is a bullish pattern. I'll be discussing that in the next video. In that case, you will be buying, but I hope you have understood this pattern, and I hope you can use this in intraday levels. You can use this. Let me see if I can show you somewhere on the intraday part. This is Bank Nifty. Let's come to a 15 minutes chart. See this on a 15 minutes chart. Bank Nifty is using, it went high, it made a low. This is 1, this is 3. This went high, sorry, this is 1 and this is 2. It went high. Now this high is higher than the previous high. Happened? Correct. This made a low again. Now this low is higher than the previous low. Correct. Again it went high. You could have bought here. Again it went high. Now this high is again higher than the previous low. Again it made a low. Again it went high, and when the fall came, now this is going right to an area lower than the first low. I hope you used it to your advantage, and I hope you have understood it, and I hope you will definitely use it to your profits. Thank you so much. Keep liking, keep subscribing, keep sharing, and more such knowledge will be given to you. Thank you guys.